Imagine transforming an entire city skyline with buildings that are not just places to live, but experiences in themselves. That is the vision driving today's guest, Kash Pashootan, the mastermind behind EMBLEM Developments. As the founder and CEO, Kash has quickly positioned EMBLEM as one of Canada's most innovative real estate development companies, known for its design-forward approach and commitment to creative spaces that resonate with modern urban living. With his background in finance and his keen eye for detail, Kash brings a unique blend of business acumen and aesthetic appreciation to every project. In today's episode, we'll explore how Kash combines strategic market insights with groundbreaking design to redefine what it means to live in a city. Whether you're a seasoned real estate professional or just passionate about the future of urban living, Kash's insights are sure to inspire and inform. My name is Simeon Papailias, and this is the Broker's Playbook podcast. All right, everyone, welcome back to another episode of Broker's Playbook podcast. As you heard in the introduction, today I have a very, very special friend, colleague, business leader, national industry, real estate industry and finance leader, Mr. Kash Pashootan joining me. Kash, welcome to the show.
Thanks, Simeon. Good to be here.
It's not the first time we have had discussions of this nature. It will mark the first time that you're going to be sharing your incredible insights, what I believe are incredible insights with our Broker's Playbook audience. And I don't think there's a better way to introduce you because I have heard parts of your story and I feel it's fascinating. You're not 70 years old. You are very young, and I believe your story and accomplishments, for that matter, in your life thus far are not only significant, I think they're monumental. You should be proud of everything you've accomplished. I, as somebody from the outside looking at EMBLEM and First Avenue and kind of everything that you're involved in, seemingly goes a certain way. We'll talk about that. But I want to start with people kind of understanding who's sitting here today in our studio. And if you want to take us through your story, I mean, you started in finance, take it away and just let everyone know how we got here.
Sure. Yeah. It's, the full story is a long one, but I think it's either you tell the whole story or you don't. So, I was always entrepreneurial, Simeon. I think I remember from a very early age, I was always thinking about growth and expansion in everything that I did. So as a kid, I had a paper route and I delivered the paper route and I was always thinking about how can I grow this paper route. And so, getting a paper route when you were young was difficult. It was sort of the golden job and competitive. And so, I remember getting 3 paper routes in addition to the one that I had in different parts of town. And I would have I originally started doing a paper route myself. And then I had my sister put together the newspaper and then I would deliver it. And that, created some more capacity for me.
Scale.
And then from
at a
there,
very early age.
Very early age. And I was probably, maybe 11 years old. And then I said, if I can get this paper route, I can get other ones. And so I ended up getting 3 other paper routes in different parts of the neighborhood and had friends that lived in those areas. And so getting the paper route is the hard part. I was able to get the paper route. I had friends in those different sort of neighborhoods, assemble the papers and deliver them. So, at 11, 12 years old, I had 4 paper routes going in different parts of the city. And on Saturdays, instead of my parents driving me to my friend's house for a play date, they were driving me to deliver an envelope, which was payment to them for the services rendered, which was putting together the paper and delivering it. So it started young, I guess it's safe to say. And I've always said, I always joke with the team now and say that we don't like the 1+1 business. We like the 5x5 business. And so anything we do, we look at how can we make it a leader in that space? How do we do it at the highest level possible? And how do we do something that has high ceilings?
And I mean, and I'll just take this one step back for any of our audience who didn't grow up getting papers or flyers delivered to their homes. Putting together the paper means assembling the flyers, the different parts of the newspaper, depending on the day. The paper could have been this thick, a Saturday edition, for example, and monthly editions. So creating an SOP, for example, for your friends to follow, for you to ensure that you maintain your paper route was important. So how the standard delivery and what the expectation was before they get that check. So I just find that fascinating because not everybody grew up with those opportunities or doing this type of work at that young of age. I, for example, grew up in kitchen restaurants and kitchens, washing dishes at that time. But working and understanding delegation and scale is very important. How did you use your early education of business to take it to the next level? Let's say you're 14, 15, 16. What's next?
Yeah. So when I was, it was around that age, in my sort of early teens when compact disc CDs became a big thing. And if you remember, Columbia House and BMG were these music services that came out, and basically they allowed you to buy CDs at a low cost as long as you bought a certain amount of CDs at full cost. But that aside, what they had at the time was that they would pick one CD from each genre of music: pop, country, alternative, rap. And they would sell that CD for $9.99, I remember, so $10, and you wouldn't pay any tax. And at the time, CDs were $16.99, and I remember with tax they came out to $19.54. And so
Core memories.
I remember, yeah, like it was just yesterday. And so I remember with some of the money that I'd made in the paper route, I bought a typewriter at a garage sale. And again, I could have written out the names of those CDs with hand, but I wanted it to look professional. So the idea of having that high bar started before, you even knew it and did it intentionally. It was just this, there was always an underlying passion to do things at the highest standard possible. So I bought this typewriter, and each of those genres of CDs, so the one country, the one pop, the one rap CD, I would take and I would type it out on the typewriter. So at recess, right, when you're a kid, you have sort of the break in the morning and you have your lunch break and the afternoon break. I would go around the school, and I always knew which kids were well off because they had the new Nike shoes. So that was my target market. It was a very focused strategy. And I would go to them and offer them the CD.
High net worth.
Yeah, exactly. And I would hire them the CD. I would offer them the CDs, and I was charging $15. And so it was a great business because I didn't hold any inventory. I took, a deposit at that time. And then I would order the CD at $9.99. I would get it 3 weeks later, and I would deliver it. I remember, again, a lot of the things you see in our businesses now, it's the roots and really the DNA was always there. I would put a nice bow on it and sort of personalize it. And so it was a great mutually beneficial business. The clients, which were kids in my grades, a little bit older, a little bit younger, were getting the CD that they wanted. They were getting it for cheaper than they would get it at Music World or HMV at the time. They were paying $15 instead of $19.54, but it was being delivered right to them. They picked it. And
service.
And for us, for me at the time, it was great. I mean, you're buying something at $10, you're selling it at $15, no risk because you weren't holding any inventory. And that's how I was able to afford Nike shoes back in the day.
So that's a little bit more like fast forward today. That's called drop shipping.
Yeah.
Which became popular with online.
For sure. It was interesting though. I was always, as a kid, I was, not that I'm big now, but as a kid, I was shorter than average and I was skinnier than average. And so I remember, having my Ziploc bag with dollars in it that I would collect from the CDs, and the older kids, a couple of times took my bag and my money was gone and I had to figure out how I was going to replace the CDs. Again, they don't seem like big problems. When you're 14, the world is ending when you're faced with those problems.
100%.
So I remember with some of the money that I made, I would give it to my mother, and when she would go to the grocery store, she would use those $3, $4, $5 that I would give her to buy fruit roll up. And I remember the strawberry was the key flavor. And so I would get a 6-pack of fruit roll up, and I found the tallest, biggest kid. His name was Andrew. And he would walk around with me at recess, and he was like security.
Bought some protection.
And I would give him a fruit roll up each day. So, when you look back, the fundamentals and the early pillars of business were all there. For me, it was very natural. It was very intuitive, but I was always thinking about what's the next level? What's the next step? How do we expand this? How do we grow it? How do we deepen the offering? So those are really the early days, and that's, I think, the basis to me getting into investment management and equity markets.
Right before we get to that, I do want to kind of take that in and really get my head wrapped around it, because the business fundamentals of how you ran your business in school, it might be funny now looking back. The actual business fundamentals of buying an insurance policy, which is the tall kid with a fruit roll up. Andrew, may God bless him and all the influence he had on.
He ate a lot of fruit roll up.
Good, as he should. Maybe he grew even taller. But having all those things in place are to protect the ongoing integrity of what your value proposition was at the time. And we can laugh and tie it to fruit roll-ups and CDs, or we can take it into a 4 billion plus empire of real estate that you have under management now.
Yeah.
And really change the tone of fruit roll-up to you're controlling a mass amount of wealth, and your responsibility to the people that you do it for is not going to be fruit roll up and move along.
No, the stakes are a little higher today.
The stakes are a little higher. Take us through how that came to be.
Yeah, so as I wrapped up my teen years and I was going into university, like everyone else, you have no idea what you're going to do, and by no means do I look at the early sort of businesses that I had and think I had it all figured out. I didn't. You sort of do what everyone else does and say, what am I interested in? And you try to match your interest to what your major is going to be in school. For me, I was always very interested in business and what made businesses work and succeed and what made businesses fail. And that started before I even knew what businesses were. I remember going to a bike store to get a new bicycle, and my parents would take me to a couple of different stores, and they would tell me that, Kash, you weren't interested in actually the bike as much as you were on the way home, you're asking us questions like, why do they have the same brands, but one store is very busy and the other store isn't busy? Or why is it that one store has the different colors and the other one doesn't have the more desirable colors? And so I was very fascinated with business. Another example was, we didn't grow up very wealthy, so the fanciest restaurant we went to was Red Lobster. And you'd go to Red Lobster as a kid and they'd bring out the treasure chest and you could pick one toy. And my parents talk about how, again, it wasn't about the popcorn shrimp or the meal. It was really all about that treasure chest. And what I mean is that at times we'd go there and there would be a 3-4-way tie for which toy I wanted. I couldn't decide. And other times I'm at the bottom of the treasure chest and I could not find one toy that I wanted. And so my parents tell the story that you would spend the entire dinner talking about, why are some of the toys so desirable sometimes and other times they're lousy? Who picks these toys? Do different locations have different toy pickers? And so
these are all real questions.
Yeah. And so as I became older and I was getting into university, I didn't know what I wanted to do like most kids, but what I did know is that I was very fascinated with business. And so studying business and as it felt natural. And as I finished school, again, you're lost and you're trying to match your interests with a career. And so getting into the equity markets and managing stock portfolios was interesting because the idea of being able to dig into companies and understand them, as you know, when you're analyzing and investing in stocks, you can do that on an endless basis. You could keep digging and digging and digging into a company, and after you figure out everything there is to figure out, which never happens, there's always more to figure out. There's another company, so it was basically a playground for me mentally to be able to be in that space.
And who did you work for?
TD Waterhouse.
TD Waterhouse. At what point during this, because now I want to kind of start fast tracking through, because I really want to get to where Kash Pashootan, the entrepreneur in equities and wealth manager, intersected with your interest in the allure, for lack of a better word, because
Sure.
we'll get into that too, of real estate.
Yeah.
So you're at TD Waterhouse, you're managing portfolios, you're growing, you're seeing what's going on in business and that whole facet. Tell me about that in the transition to your own wealth management company.
Yeah, so being at the bank in the early days, managing equities was great because, as with any large institution, there's a lot of resources, there's a lot of people, and so it was a great place to do some learning. But I knew very early on, when I say early on, my first year, I knew that that's not what I wanted to do for the next 30 years, and I think it was a great place to be for many people, but for me, it wasn't enough, and I wanted to go deeper, and I wanted to expand, and so. I left TD and joined Raymond James, which is a publicly traded investment firm. And when I joined Raymond James, part of my deal was that this brand, First Avenue, would exist. And so it was First Avenue of Raymond James. And the vision was always to have a boutique investment management firm. And part of that is, and you see that a lot with what we're doing now in our different businesses, real estate included. But brand is so important to me, not because of the glitz and the glam of brand, but brand really is what you stand for. And
100%.
And I've always taken that as a very serious part of the business. What we stand for is really everything. And the challenge I found with the larger organizations is that it's difficult to really stand for anything because they're so large. And whatever you stand for is going to be drowned out by the thousands of people that work there. And some are great and some are underperforming and many are average. So it's difficult to really create a niche brand when you're at a large institution. When you think about investment management, you don't think one bank is better than the other. And you don't think of any bank as being a phenomenal investment manager.
If you think of how do we refer about the big banks?
Yeah.
It's a big bank.
It's a big bank.
You have no expectation of anything other than templated solutions that are easily applicable to me. I'm part of the average, so I can just be blanketed by the big bank. Not that there's anything wrong with that.
Yeah. Yeah.
But TD, CIBC, RBC, all the big banks have that in common. They have the cachet of being a big bank. They can just kick the door open when they want to, how they want to.
Yeah.
But me as a client have never been able to feel that I belong at the big bank. It's just part of my my life's journey because I have to deal with a big bank.
Yeah, and I think for me, being on the other side, being an employee and managing money for families, it's again, you can't create an identity in a brand. And when you think about investment management, no one really goes to the bank for investment management because they go there for the primary reason that they're an exceptional money manager. You don't go to the bank because you say they're the smartest investors. You go to the bank because it's convenient. You go to the bank because you feel like it's safe. Many go to the bank because it's the I don't have to think option.
Correct.
And that didn't align with what my vision was. Not to say that obviously the banks are massive and they're doing a lot of things well. For me, it was very clear. I wanted to build a brand. I wanted to build a reputation as being a very smart investor. And I wanted to build a team of people that had that vision. And I knew that it wouldn't be able to be accomplished at the bank, because any organization that's as big as the banks, it's difficult to control the culture.
You've been known to use your brand, to me, includes the word exceptional. I believe you've used that word in some of your marketing. I think you've used it really well. And I believe that's what you're trying to get to right now. You wanted to build something exceptional, and that cannot be done with a general big brush like this. You need the finesse of a fine point.
Absolutely. And I think that, for us, and we talk about this a lot in our firm, is that to be the best, you can't be interested. And I think in big organization, there's a lot of people that are interested. To be the best, you have to be obsessed. And so, as our businesses grow, quite frankly, it is harder to find people that are obsessed. And what I've learned over the last 20 plus years in being in business is that we'll still have an exceptional firm and business, even if everyone's not obsessed. But we need the core, the executive team, the management team to be obsessed. And that is what we have today at First Avenue and at Emblem.
First Avenue became a massive company with offices on Bay Street, Toronto's Wall Street. You've reached tremendous heights with First Avenue, and you saw an opportunity in the market.
That's right.
You saw an opportunity to engage in what was a red hot industry at the time of your entry. The market was functioning at its one of its best peaks. How did you recognize that as a great entry point, and what did you do to get into the business?
Yeah, so really, First Avenue, in terms of an investment firm, started out focusing just on stocks and equities, and that's how I started, as we talked about. And after building we run two strategies at First Avenue: a North American dividend stock strategy and a North American growth strategy that we call Momentum. And those have now 20 plus year track records behind them. And as we were building that, we were asking the question of, what do ultra high net worth families, what else do they want? And so really the next pillar in the building of First Avenue was to provide extensive planning capabilities. So the firm is made up of tax professionals, estate planning professionals. So at that point, an ultra high net worth family would come on board. We would manage the stock portfolio for them, stocks and bonds, and we would do extensive planning for them. Asking that same question again is really how Emblem was born. And so to say that if a family comes in and they're investing 50, 80, $100 million with us, they need more than just stocks and bonds, because even though we're diversified in the stock market and in the bond market, there's a limit to how much you can diversify in a single asset class.
That's right.
And so the need to diversify further was born, and it really started. This light bulb went off in 2008 when the stock market was down significantly.
Real estate was too.
Yep. And when the market was down as much as it was, we spent actually. So the good news was First Avenue weathered 2008 much better than the market did. But we took a lot of 2009 to look at who weathered the storm the best. And when we looked really right across the board in Canada and the US, Simeon, it was the pension funds. And so then the next question is, well, what are they doing differently? And so when we looked at it, we realized that the pension funds in Canada and the US, and that investment portfolio, how are they allocating their dollars? Well, they have significant exposure outside of the stock and bond market. And so when you look at the numbers, for over the last basically 50 years, pension funds have had about half of their portfolio outside of stocks and bonds. And this is really sort of relevant to the world that you and I live in, because when you think about people watching this podcast and you think about their investment portfolio, many of them have saved and their investment portfolio is at Scotia or RBC or one of the banks. And so they're all in stocks and bonds. But when you look at what the pension funds are doing, their asset allocation is very different. And somebody's going to be right and somebody's going to be wrong, only because those two strategies are so far apart. To have all of your money in stocks and bonds compared to the pension funds having more than half of your money outside of stocks and bonds, those are two very different universes.
Especially when one is reaching for such long money and they're outside of the stocks and bond market.
Yeah.
It's very interesting. And most people do not know that.
Yeah. And they have to, why is it that when someone has a pension, they don't worry about retirement? So I don't worry about I have a pension. Well, what is a pension? It's not a magic universe that puts money in your bank account every 2 weeks or every month. It's an investment portfolio. So why is it that the investor that has a portfolio at Scotia or CIBC is always worried about what's going on in their portfolio, but someone that has a pension, which is an investment portfolio, they're not worried? Again, these were all thoughts we were having in 2008. And when we looked and analyzed in 2009, as I mentioned to you, the pension funds weathered the storm a lot better. And that the main reason was their asset mix. And at that time, they had, on average, about half, if not a little bit more, outside of the stock and bond market. That looked very different to our portfolio.
And was that in real estate, Cash?
Real estate was a big part of it, right? Alternatives is sort of how it's classified, and then there's all sorts of subsets within alternatives. But absolutely, real estate is a big part of it. Now, I will say that recipe for success has only grown. So today, when you look at the three largest pension plans in Canada, they have on average about 72% of their assets outside of stocks and bonds. So for viewers that have worked hard, saved money, and the majority of their wealth is in stocks and bonds at the bank, for example, the question to ask yourself is, the way that I've bet and designed my retirement is drastically different than what the three largest pension plans in Canada are doing. And so am I comfortable with that bet, or am I just living that out because the local financial planner told me? Now, I will say that it's like everything. There isn't an easy answer to just all of a sudden tomorrow go out and start buying real estate or invest in any alternative
Definitely
strategy.
not.
Because there's a whole slew of risks that come with that as well. But just to start, sort of take a step back and just ask yourself the question, okay, conceptually, my portfolio is very different than what the pension plans are doing.
So what I want to do, I have one last question for you, and we're going to have a quick break. Is this the thought process that led you in First Avenue to create Emblem? Is this the vehicle? So you see what the big pension funds are doing, which is obviously not beyond inspirational. There's pension funds that literally have a bigger war chest than most countries on earth.
That's right.
With that being said, is this the model that you saw? You're like, hey, open up your eyes, Cash. It's time to make a move. Is that how Emblem is born?
That's exactly it. Yeah, that's exactly it. Because we looked at, in 2009, we spent a lot of time analyzing who weathered the storm the best. And as I mentioned, it was pension funds. And a big part of that was because of their asset mix. And a big part of what was not in the stock market and the bond market was in real estate and alternative assets as a whole. So we started to incorporate that into our own strategy. And at that time, we've always been very hands-on as a firm. So our stock strategies, we didn't farm out, we run them internally. And that's just part of our DNA. So we did talk to developers at the time, Simeon, in terms of considering just allocating some of our capital to them. And
because I was going to say that, you could always do that, right?
Yeah. And that's a lot less brain damage. But,
well, it's a lot of things, but you could have just invested in other developers.
We could, for sure. And the reason why we didn't was very simple. There's some great developers in Ontario as a whole. Forget just Toronto. In Ontario, there's some great developers, and we met with a handful of them. And we were meeting with the most senior people, so they weren't sort of entry level or ambassadors. They were owners of these firms. And when we met with these developers, although they had a lot more experience than we did in real estate development, I think broad market or broad business acumen is somewhat universal. So, the ability to think 2-3 steps ahead, the ability to ask questions today that people would ask when they get to that point, are somewhat universal. And we were doing a lot of that. And so the answer to many of the questions that I asked and our team asked were answers like, well, we don't really worry about that, or that's not a big deal, or we figure that out when we get there. And as I shared with you earlier,
I don't think so. Cash is
well,
like, I don't think so.
yeah, I've always, listen, it worked out for them.
You know what? When we come back, the star, which is Emblem, is going to be born. And we're going to break down how not only Emblem made a difference to the market, but what it used to become a market leader. Give us 2 minutes. Welcome back to Broker's Playbook. We have had a very, very interesting conversation, hearing all about Kash's background story, where he came from and how he got to be the CEO of one of the leading money brokerages on Bay Street with First Avenue Capital. And we just got to the point before the break where he masterminded the launch of one of today's leading real estate development companies, probably one of the busiest developers in the GTA specifically, if not in all of Canada. But Kash, tell me about Emblem, the early days, and what your idea was in building that brand from the ground up, and of course, facing against some of the biggest developers in North America.
Yeah. So, starting from the name, we didn't want to have some name that led the consumer to a conclusion. I've never been one for putting my name on something, my personal name, and then the idea of having a name that has a definition and leads the consumer, we didn't want it to be that either. I wanted it to be the work that we did was our brand. And so I wanted the name of our company on the real estate side to be something that actually has no meaning. The same as First Avenue. People sometimes say First Avenue, where did that come from? Was that a street you grew up on, or is that a great? The reality is, it means nothing, right? It's just you can't call something nothing or no logo or blank canvas. So we just try to think of very simple names and then have the work that we do be the brand. And so Emblem is no different. It was the idea of, okay, we can't call our logo. We can't.
Well, you're saying that because you know what emblem means. Being Greek, I have a little bit of a benefit here. Emblem is the Greek word translation emblema of symbol, of logo.
Perfect. Yeah.
Emblem is a mark.
Exactly. So when we looked up in the thesaurus, looked up logo, emblem came up. So we can call our company logo. So we called it Emblem. And what is it an emblem of? What is it a symbol of? Well, it's the work that we do. And our work will define our logo, our symbol.
Funny, the word emblem, it's actually, in Greek, it's a feeling more than a word. Emblem means like whether it's positive or negative. Like this horrific thing is the emblem of horrificness. Or this is the emblem of brilliance.
Yes, the mark.
Like a diamond is the mark of brilliance.
Yeah. Well, our name, as you know, obviously Emblem, and our slogan, our statement is the mark of exceptional design.
And I truly think that really captures everything that you've worked since I have met you to do. And this isn't by any means a promo of anything, because I speak to people here every day. I do believe Emblem has succeeded in creating that brand, because I speak to my colleagues every day and they are happy to go to work for Emblem every single day.
Thank you. Yeah, I appreciate that. We've worked very hard for that.
My question to you is this, because I have noticed it and I want to see if I'm right. On my card here, I have design as a strategic differentiator. I believe, from what I've seen, heard, felt, and done since I've done hundreds of deals with your office, I believe you position design, specifically design. I've seen you do partnerships with, the highest design houses in France, like Louis Vuitton, like the biggest architects, Bertie Filick, and interior designers. And why?
Yeah, it's a great question, because we do spend more on our buildings than we should, or most do. But I think that not to sound overly cliche, Simeon, but I really do believe that you want to get involved in things that are true to who you are, and you're passionate about it. And although I come from a world of numbers, I'm very passionate about art. I'm very passionate about design. It was always my escape from Bay Street. It was always my escape from the world of numbers. So, I've subscribed to multiple design magazines for the last 20 years, and it was always just my other side of my brain, and an escape, like I said, from the stock market. And so when Emblem was born, we absolutely approached it from an investment perspective, but for it to create distinction in the marketplace because of our attention to detail and
Because you still
design.
got to compete.
Yeah, but to create that distinction because of attention to detail and design, that was very natural. So absolutely. I mean, when we launched our first few buildings, and we would take the hardwood flooring that's in the units and put it in tanning beds and expose it to high amounts of UV lighting to show how the flooring would age over time. Or, for example, the backsplash in the kitchen, instead of it being tile, we would put a full slab, and explain why we did that. Not because it just looks better. It does look better,
But there's no grout.
there's no grout, and you've heard it, so right? When you look at that space and there's no grout lines, and your eye just continues to seamlessly flow, that's important. And when you invest in having floor to ceiling glass like we do, you combine that seamless kitchen with more natural daylight coming in, the space feels larger. When you walk into a bathroom and the glass doesn't sit on a metal shoe or a metal channel,
That's right.
you need to spend a little bit more money for the glass to be thicker. But when it doesn't sit on that metal channel, when you stand at the door and look through the bathroom, that metal channel breaks your line of sight. When that metal channel isn't there, you look through the glass to the back wall of the bathroom, giving you the illusion that the space is larger. So we do it for aesthetics, but we also do it for purpose. And what that achieves is, from the time you walk in the suite and you look around, the space feels different. The space feels larger. So our 550 square feet feels larger than many of our competitors' 620 square feet or the 600 square feet. And the reason is, we have been very methodical, very intentional about how we designed all of that space. And I always say that as a developer, I really believe a big part of what we do is to evoke a feeling, and that feeling is very powerful. From being experienced in the real estate market, you go look at homes, you go look at condos, and whether it's you or your client, when you walk into certain spaces, there's a feeling that
No doubt about it.
and many consumers will not know why they have that feeling. And the reality of it is, it doesn't matter. It's that feeling is it. That's a powerful feeling. So we look to evoke that feeling.
I'll bring that to common situations with true business results. The it feeling that you're talking about is, and I'm talking about whether you're representing a tenant, a buyer, doesn't matter. If I'm showing property and it's a rental, and we have 4 properties to look at tonight, and I run into 1, 2, 3, and then I run into one of your units, 99%, I can tell you, are going to lean towards, are we able to apply on this one first?
Yeah.
What that creates for the investor who bought one of your units is they get the best tenant first. If it's a buyer, it's no different. When you invested 4 years ago in an Emblem unit, and we have, again, hundreds of clients that have, when they come to completion, they're like, oh, I would love to see my kid live in there one day. It's gorgeous.
Yeah. Yeah. And that feels really good hearing that.
But that's the difference.
That's the difference.
So there is a major, when you have a run-in-the-mill typical condo, nothing wrong with that. There is a time and place for utilitarian inventory. But if it can be better and comparative in price, it becomes a no-brainer. That's what I'm trying to say.
And what you've just said, Simeon, is our business model.
And that's what I believe your business model is too. And that's what I was trying to prove when I said you chose design as your strategic differentiator. And it worked.
Yeah. Yeah, and we did that and remained true to who we are. And really, our business model is, if you're going to pay about the same price for our product as the other product that's out there. We're not looking at selling off of floor plans. We know where we shine is when the building is built. And like you said, everything's the same on floor plans, but when the building's built, from the time the buyer, before they even walk in, when they look outside of the building, we don't use stucco on any of our buildings, right? So it's stone, it's glass, it's materials that you would generally see in much higher price point buildings.
No,
So
it's full of wood, stone, and glass at the highest level, and I think that's what strikes somebody right off the bat.
And so, to your example of showing it to 4 tenants, before they even walk in, but they get out of the car and right away they feel, okay, this is different, and they come into the lobby. One of the things I'm very adamant about is that we don't use prints in terms of the art that we hang in our buildings. So whether you're buying in Hamilton or downtown Toronto or Mississauga, you walk into One Jarvis, you walk into Artform, 2 buildings that we delivered this year, you'll see original pieces of art. And so again, why is our buildings feel different? Why do the units feel different? It's not one thing. It's like most things in life. You add up a bunch of little things and together it makes the difference.
And that's incredible. Thank you for sharing. I'm going to shift this conversation a little bit to some practical advice, specifically on business fundamentals. You have started 2 massive companies. I'm sure you've started many other companies. What is the top 3 pieces of advice you would say are fundamental to getting started and creating a brand, into you becoming somebody the market wants to work with?
Okay. Look, I think, and we hadn't reviewed these questions before, but I think the most important thing is you have to be obsessed. I think that, not to discourage people, but what I would say is don't start something unless you feel like you have the capacity to be obsessed. If you're interested, work for someone that's obsessed. You'll have a much better career. If you're interested, work at a company. If you're interested, work for someone that's obsessed. But if you're just interested and you're competing against someone that's obsessed, it's not going to work out well.
No contest. This is a shout out to Jazz Takar, my business partner of 20 years. People will call me to say, what the hell is wrong with your partner? He's obsessed.
Yeah. So I think that's the key.
And I said, that's my partner.
Yeah. Yeah. No, I think you have to live and breathe it.
100%.
And in the businesses that we're in, we live and breathe it. And when you get into those, so if someone's watching out there and they're looking at getting into a certain business and they look at the leaders in that business, think, wow, that the gap between where they are and where I am is so wide. The short answer is, yeah, it is. It's really wide. But you can really tighten that gap with being obsessed. And being obsessed means that you have
elbow grease.
You have to be willing to do things that others aren't willing to do. It means that those that are close to you have to understand you won't be able to be home at 5 o'clock every day for dinner. And when the weekends come, that doesn't mean that that's time that you turn it off, because you can't turn it off. You have to manage. So the pursuit of excellence has to be front and center. And look, I'll tell you, our core values in our firm, the first one is the pursuit of excellence. So it's what I'm getting at is the pursuit of excellence in your health, the pursuit of excellence in being a father or a husband or a wife or a mother, and in the pursuit of excellence in business. So I'm not in any way hinting or insinuating that if you're going to create an amazing business, you need to be a failure at every other facet of business. I actually disagree with that. I'm very against people that have built something great and use that as an excuse to be a disaster in other parts of their lives. I think that it's a mindset, and the mindset is that you're always trying to be better. You're always looking for the next level, and that next level is in your relationships, in your friendships, in your business, but it comes with sacrifice, and you have to be willing to make those sacrifices.
Well, 99% of the sacrifice is typically your sacrifice. And what I'm referring to is the number of questions I personally get is, do you ever sleep?
Yeah.
Yeah, I do when I choose to, but I do work a lot. I wake up very early, and you'll see emails from Mr. Simeon Papailias flying in between 11 p.m. and 1 a.m. because I do want to have dinner every day with my children.
Yeah.
I want to spend at least an hour catching up with my partner. for her to be able to share something from the day that's normal and to be able to be on the same page to sacrifice the next day. So an hour to work out, an hour, there's only so many hours in a day.
Yeah.
So what I believe that you said is obsession with your craft will narrow the gap quicker than most people will think if you are that committed to it.
Exactly. You got to be obsessed, and that obsession leads to fierce work ethic, and fierce work ethic leads to progressing very quickly and solving problems. And I think so. I think being obsessed is one. I think another one that's really important is fortitude. You have to do difficult stuff. Like, I think people are very surprised. We're so programmed to do what feels comfortable. But the problem with that is that's the opposite of progress. So like you got to tell yourself it's actually very natural to feel like this is really hard.
Get off the known course.
It is very hard, and it's because you're learning things that you haven't had to do before. If it doesn't feel hard, you're doing something that you're already good at. You're doing something that you've already done. And so you want to have problems that you don't have answers to. You want to be doing things that you're not great at, because the problems you don't have answers to today, if you keep with it, you will have answers to them. And the things that are really hard and you're not good at, if you keep at it, next year you'll be better at them. And the year after that, you'll be better at it. But what ends up happening is you start programming a mindset that I want to constantly be doing things I'm not good at. I want to constantly be doing things that are difficult, because the more success you have, the more you understand that feeling is the beginning, and what's on the other side of that is progress.
I think there couldn't be a better or stronger statement to end our Brokers Playbook podcast, because today we have some very big requests from the Brokers Playbook community. And that content is coming up next for anybody on Brokers Playbook podcast that wants to access the actual community. Head over to brokersplaybook.com/community and you'll find the bonus content there for everybody who joined us. Thank you, Kash. Thank you for joining us on Brokers Playbook podcast.
My pleasure. Thanks, Simeon.